Investors and traders, welcome to the channel Market Chart Pattern. Today is the 18th of April 2025. Hope everyone is having a fantastic day. For those subscribers who are celebrating Easter, a very happy Easter. We will take a look at the key US markets in this video. The main focus will be on the dollar index, the key currency pairs, and then we'll take a look at the bond market through the eyes of the US Treasury notes and futures, gold, silver, and then we will actually also try to take a look at the Bitcoin quickly as well. For the stock indices on Sunday, I will release another video which will be exclusively for the stock indices. We'll take a look at some of the world indices and then focus on the US stock indices, and we'll also try to take a look at some of the sectors as well. As always, this video is for educational purposes only. It is not a financial advice. So what we are looking at is the weekly chart of the US dollar. You can see the US dollar is under pressure, in the sense that it's just been selling off, when it did look like last week that perhaps there was some support coming in from this double bottom right here. We saw a little bit of rally in the US dollar, but the dollar has just gone nowhere. The key is that this 99 level, which is a 61.8% Fibonacci retracement, is also a bottom right here, is a very important low, because of the 61.8% retracement and also the structure right here. Getting below this 99.98 level will actually mean further weakness coming into the US dollar, and the dollar could actually accelerate to the downside quickly. And we'll be taking a look at this 94.50 level, and then if the market is still weak, we could be looking at the test of this region right here, back to the lows we saw in 2021. Now if we just move down to the daily chart right here, you can see that the dollar has tried to rally a few times, but the bearish market symmetry is still in play. Over here it did look like, because the moves were really exaggerated, that we could see some strength in the dollar, but the 20-day moving average capped it, so it just didn't go anywhere. So really key is 99.98 level on the US dollar. It's just hanging in there by a thread. Now if we just flip to the other side and take a look at the Euro USD, this is the daily chart. Let me move over to the weekly chart right here. So guys, you can see that this market just has been really strong, and this market has actually risen about 12.71% ever since it hit our support zone right here. Now this is really key. We had drawn this support zone because of the several patterns and Fibonacci ratios which were coming in confluence right here, and the market actually picked up stream ever since it broke above this 38.2% retracement right here. It's just been going strong. Now there is a ABCD or one-to-one price projection formation that I do see here. Is much more visible on the daily chart right here. So it's possible we could see some resistance come in play right here. And then on the daily chart, we'll also take a look that the market has just been consolidating around this level, and this level is actually right above the 61.8% retracement, so right between 61 and 78.6% retracement is where this level is. Now, just because it's above the 61.8% retracement, and also we have seen these really wide-ranging bars, so the momentum suggests that perhaps this CD leg might be extending, and we could see actually 78.6% retracement level being reached on the Euro USD, which indicates further weakness to come in the US dollar. So right here you can see that that's the ABCD that we saw, that this market is actually consolidating right here. I'm just getting rid of this to make it a little bit more visible, easier to see some of these. I'm removing these, and you can see it's just been consolidating here, but just nothing much going on. These really strong bars, in my perspective, mean that we have got further upside in the Euro USD. And on the flip side, let's take a look at the British pound as well, and the British pound is pretty strong. it's looking pretty strong. The chances are it wants to go and tackle these highs of the 27th of September 2024. If we just go down and take a look at this on the weekly chart, this is where our bottom came in. Right at the 38.2% retracement, went a little bit lower, and then we have seen a really nice rally in the British pound, and the British pound has risen by, let me actually try to get this right. It's risen by about 9.76%, not as much as the Euro USD, but it looks certainly pretty strong. So the chances are we are going for this 1.38 in the British pound, which also indicates further weakness in the US dollar. Now, really important currency pair is the USD JPY. This is the second widely most traded by volume. The most traded is actually the Euro USD, then the Japanese yen versus the US dollar, and then the cable, which is the British pound versus the US dollar. Now I'm talking about the forex markets, but the futures market volume should still follow the forex market in my opinion, but I don't have statistics on those. So in the forex market, which is about 7-8 trillion market volume traded on daily basis, these are actually the kind of volumes that we see. So here it's just coming back, testing this bottom of this. It's also possible that what we are looking at is actually an ABCD to the downside, so one-to-one price projection, which will take it right to this 200-week moving average, which should be a pretty strong support level. Let me actually also draw a retracement, and yeah, that will be very close. This 78.6% retracement as well. So looks like the market wants to do this, getting a little below the structure of this, where it found support previously but wasn't able to make new highs. And I thought actually it might actually make new highs, but the market did not do that. Let me actually, I think I chose the wrong one. I was using the FXCM one. Yeah, there we go. So here, this is where we had pretty good support coming in, and right when excuse me, when it went into the 38.2% retracement, it was not able to move any higher, and this is where, when we have the strong trending markets, the 38.2% retracement, it provides a pretty good resistance level. So normally between 38.2%, 50% in strong trending markets is pretty good resistance level, and also the moves also tend to be fairly accelerated because the trend gets stronger. So again, looks like we are going for at least the test of this bottom right here of September 2024 in the USD JPY. Now let's take a look at the Aussie dollar as well. Um, Here we go. So the Aussie dollar is really interesting one, uh, because you look at this, it formed this reverse point wave pattern 1, 2, 3, 4, 5. It's a very rare pattern. It doesn't really happen too often, but when it does, it is a pretty powerful pattern formation. And in the Aussie dollar, we have seen this one take place right here. This was a smaller scale, but we had also seen a similar kind of pattern formation right here. You can see that right here, very similar kind of wave formation, 1, 2, 3, 4, and then the fifth wave, and then we saw a massive move to the downside at a smaller scale, 1, 2, 3, 4, 5, and then a massive move to the downside, and then we have seen a really nice rally where the market has come back right towards the stop. So it was just not the reverse point wave only. We also had the 38.2% retracement of these highs to these lows of the fourth wave right here coming into it. That was also a key factor into it, and we saw this massive move to the downside. Now the market has recovered. Essentially, it becomes a big trading range. Only getting above this 38.2% retracement would indicate we are actually resuming the rally. So now let's take a look at the bond market through the eyes of the US Treasury note of 2-year duration. This is the shorter end of the curve. So here we go. And here, let me actually remove some of these to make things, a little bit easier to see. I like to draw these lines because these are support lines just from the structure. Here we completed this smaller ABCD in green, and then we have seen a support come in also from the structure, which also happens to be a double bottom and a triple bottom formation. But the chances are this bottom is not likely to hold, and I think we are in this ABCD, the blue one, in play, which could in fact see the yields moving, a little less than 3% on the 2-year Treasury notes. This is what it looks like, and the reasoning is right here. It actually found resistance from the 38.2% retracement, a strong move to the downside, and then it retraced. I believe it's 50% of this entire move. Well, 61.8%, it came right to that, not very, very close to that. So I would say 61.8% retracement, and we could be looking at, in fact, a move like this potentially, where we have another one-to-one. Here we go. It also points to about 3% or maybe even lower, possibly in the 2-year Treasury note. So let's take a look at TNX, which is the 10-year Treasury note. And here we can see that this market, we have seen massive moves in the yield, to the downside and then to the upside as well, which is more like a retracement. So here we go. Here found a great deal of resistance. I did an ABCD where CD leg is extended, and then we saw this rally come in. The rally went to above 61.8%, so basically 61 and 78.6% retracements. For the market to retrace this much, that means something. And now the market is kind of consolidating right here, but I still think the move might be actually to the downside, and we could look at a structure like this in the 10-year, where we could see the yields actually move lower, right, getting towards the bottom of the lows that we saw on the yields as of 16th of September 2024. So it could be going for those lows. Now, how do we actually confirm this, or we attempt to confirm? We just take a retracement like this. We draw in 50% and 38.2%, and this is where the market is sitting. So once it gets below 4.25, then I think we are in this one-to-one price projection moving lower, and then I think, well, let's get this done properly. Here we go, here we go, here we go. Yep, so there we go. And I believe this, once it gets into this region, is going to be pretty good support level as well. So the yields could bounce back from that point. Now we just take a look on the 10-year yield through the eyes of the 10-year Treasury note, and we can see last Thursday, which is yesterday, we have seen the market actually bounce back a little bit. So the yields have risen, but still in the resistance zone right into this region. Let me actually draw this. It is in the resistance zone. Getting above this, then I think what it means is we are in that one-to-one price projection structure, which could see certainly this high being taken out, and basically a test of this top right here, which should be 116.07, a pretty strong resistance level. So I found a great deal of resistance from the 78.6% retracement right here, and just we saw a big move to the downside, but the market has just been recovering. So this is what we also see on the 10-year yield, 10-year note on the yield chart as well. Long bond futures, let's take a look at this. The long bond futures, really strong move to the downside, so meaning the yields moved higher, and then what it has done is retraced about 38.2% retracement, and there we go. Getting above this would be a good indication. Otherwise, I think this is a little different structure to the 10-year. the long bond futures, the yields could rise, and then that would also influence 10-year as well, so the yields could rise. So really, I think really interesting point where we are in the long bond futures and the 10-year treasury note from the yields perspective. We'll probably get more indication of what the market is likely to do in the next early next week, I would say, trading. Gold. Gold is really interesting because it just keeps on making new all-time highs. While it was right here, we had a further target, a shorter term target of 1.618 expansion is right there. It's consolidating a little bit. Last day, this is what it did. This is COMEX gold, which means it's futures chart. If you are watching the spot market, your levels are going to be slightly different. This is the monthly chart. Of course, the month is not over, but I just wanted to show you that the gold moved into this target zone. But it's just really strong. It's just been hitting these targets, but it's also breaking these targets as well. Now, if we just take this box approach, which is basically a measured move, and then I have just gone back to the 22,000 market and took the lows from when it formed the low back in 2022, I believe, excuse me, 2002, and then the highs of 2011, and then we just take a major move, then we get a level at 3,637. So it looks like the gold wants to go and hit that level, maybe a little bit higher as well, so that remains possible on the longer term chart of gold. Let's take a look at the COMEX silver. It's showing a very different picture, because it keeps on finding resistance from this, where we have this nearly completed ABCD, but then also this 61.8% retracement. Let me actually try to bring the there we go, onto the right hand side. Let me make it in the middle so it's a little bit easier to see. There we go. So the month is of course not over, but this is what we are seeing right now. But if we move over to the shorter term charts, such as the daily, there we go, we can see that big move higher, big move lower. Now the market is retracing. The chances are it still wants to move higher, but it's just nowhere close to where the gold is. So that's really interesting. If the silver doesn't move as much, then gold also approaching these levels that we are watching, I think we have to be a little bit careful for the gold market as well, because we could see some sort of a pullback happen, which we have seen in the past. Let me actually go back to the gold daily chart. I just want to show you that. There we go. We saw in 3 days time about a 7.25 percentage move in gold, which is pretty quick move in the gold market. Now let's take a look at the Bitcoin. Okay, here we go. So the Bitcoin is, people call it digital gold. There have been store of wealth, store of value, whatever. What we have seen is uh, gold really outperforming Bitcoin at this moment. Now it reached this 70,000 levels. That this is something that we had been watching. We do have this green one-to-one price projection, which calls for somewhere around 62,000, 63,000 level. That could be a possibility. Now, the key thing that I would like to point out is that March was a really key month for the Bitcoin, and we haven't seen the Bitcoin move much lower. So it hit those 72,000 to 75,000 levels in March and also in early April. So kind of a double bottom right here. And I would suspect that actually Bitcoin is stabilizing right here and might be actually getting ready to rally actually. So I think I'll get some time, maybe over the weekend around Sunday, and we'll take a look at our Lucas timing model, which has done fantastic job timing wise in the Bitcoin market. So we'll take some guidance from what this spiral timing is telling us. But the month of March in 2025 is really important. And here I just see sideways price action, possibility of maybe a swift move to the downside around 62, 63,000. But as the time moves by, I think the chances of that could happening could actually be less now, and we could see stabilization to price improvement in the Bitcoin market. So this is what we are watching in the key markets. I will be back again Sunday with the update on the US stock market and also the world stock indices. And then I'll see you guys soon. As always, take care of yourself. And if you happen to like our video, please do subscribe and also hit that like button. And if you want to support the channel by giving some donation, you'll find the link in the description. I will really appreciate that. It will just help me cover some of the costs involved with the channel, such as subscriptions for TradingView, etc. And of course it will also help me to spend more time doing further research for you guys, and I can bring it out for you guys, of course, free. And this is what my intentions are, but I'll also need your support. If you can please give some donation for the channel, much appreciated. Thank you very much. Good luck, good trading, and speak to you guys soon.